Greetings, members one and all of the Salivation Nation, with a Plunge protection team here on this Christmas Eve. Yes, late Sunday, Secretary of Treasury Mnuchin contacted all of the banks to talk about their solvency. Let's explore here. This is from Reuters. U.S. President Donald Trump's Secretary of Treasury called top U.S. bankers on Sunday amid an ongoing rout of Wall Street and made plans to convene a group of officials known as the Plunge Protection Team. U.S. stocks have fallen sharply in recent weeks on concerns over slowing economic growth, with the S&P 500 index on pace for its biggest percentage decline in December since the Great Depression. Today, I convened individual calls with CEOs of the nation's 6 largest banks, Treasury Secretary Steve Mnuchin said on Twitter shortly after financial markets were due to open in Asia. U.S. equity index futures dropped late on Sunday as electronic trading resumed to kick off a holiday-shortened week. In early trading, the benchmark S&P 500's E-mini futures contract ESV1 was off by about 0.25%. The Treasury said in a statement that Mnuchin talked with the chief executives of Bank of America, Citi, Goldman Sachs, J.P. Morgan Chase, Morgan Stanley, and Wells Fargo. The CEOs confirmed that they have an ample liquidity available for lending, the Treasury said. Mnuchin also confirmed that they have not experienced any clearance or margin issues and that the markets continue to function properly, the Treasury said. Mnuchin calls to the bankers came amid a partial government shutdown that began on Saturday following an impasse in Congress over Trump's demand for more funds for a wall on the border with Mexico. Financing for about a quarter of the federal government programs expired at midnight on Friday, and the shutdown would continue to January the 3rd. I should note that the financing for these programs expired. Essentially, they were suspended. They will be reinstated, especially paychecks for those government employees affected by the shutdown. Typically, they will get back pay, which is good news. The Treasury said that Mnuchin will convene a call on Monday with the president's working group on financial markets, which includes Washington's main stewards of U.S. financial systems and is sometimes referred to as the Plunge Protection Team. The group, which was also convened in 2009 during a latter stage of financial crisis, includes officials from the Federal Reserve as well as the Securities and Exchange Commission. Wall Street is also closely following reports that Trump has privately discussed the possibilities of firing Federal Reserve Chairman Jerome Powell. Mnuchin said on Saturday Trump told him that he never suggested firing Powell. Trump has been critical of the U.S. Central Bank for raising interest rates this year, which could further dampen economic growth. The Fed's independence is seen as a pillar of the U.S. financial system. Mnuchin calls come as a range of asset classes have suffered steep losses. And then again, it talks about the S&P 500. Corporate credit markets have been under duress as well, and measures of the investment-grade corporate bond market are poised for the worst yearly performance since the 2008 financial crisis. The high-yield bond market, where companies with the weakest credit profiles raise capital, has not seen a deal all month. The last time this happened was in November 2008. Doesn't necessarily mean we need to write off the economy just yet, but the markets are reacting so far this morning, and we will take a look here at the Dow Jones. That is showing that it's down 148 points. It had earlier in the morning they were down 300 points, so there's a bit of a late morning recovery as of the recording of this video. We'll see how it plays out as the day goes on, but it is making markets nervous. Here, according to Bloomberg, Treasury Secretary Steven Mnuchin looked to squash big bank worries over plunging stock markets and reports that Donald Trump might move on his Federal Reserve chief by assuring the financial community on Sunday that market liquidity is in good shape. Some market participants, however, questioned why Mnuchin answered a question that no one was asking. even after recent market losses, a liquidity squeeze or fresh financial crisis hadn't been on the market's mind. Mnuchin's assertion of ample market liquidity risk raising doubts. It's very psychological, a lot of that goes on. And I think that Mnuchin was trying to head off something at the past that he thought was there that apparently the markets didn't feel, raising questions. Mnuchin tweeted late Sunday afternoon that he'd called the chief executive officers of the nation's 6 largest banks and that those chiefs confirmed that they had ample liquidity available for lending to consumer, business markets, and other market operations. Treasurer also said Mnuchin would convene a call on Monday, which is Christmas Eve. That's today's date, the recording of this video, with the president's working group of financial markets. Even with U.S. stock markets on the skids for weeks and the federal government in a partial shutdown since Saturday, many market watchers wondered whether there's something more systematic going on. They're saying that could be a bigger issue. The instinct is that isn't necessarily a positive thing because it portrays that there's worries that there's a bigger, broader issue than what I think is just typical repositioning towards the end of the year, said Nathan Thuft, Manulife Asset Management's head of global asset allocation. When you see it and investors look at it, I don't think they're going to view this as, oh, this is a saving grace of what's going on to cause the catalyst to turn markets around. Mnuchin's phone calls and announcement of a Monday meeting capped off a chaotic 3 days that started with another 2% lopped off the S&P 500 index and got a jolt from a Bloomberg News report that Trump was discussing firing Federal Reserve Chairman Jerome Powell. The Treasury Secretary moved to tamp down concerns that Trump would oust Powell, but it's also clear that Trump is still concerned about the Fed chair. Trump is trying to arrange for at least one intermediary to meet with Powell amid his anger over the central bank's interest rate increases, said a person familiar with the matter. Mnuchin hadn't issued a statement by Twitter Saturday evening quoting the president as saying he wouldn't fire Powell and disavowing authority to do so, which in itself raises eyebrows. Why, people wondered, did Mnuchin and not Trump, never shy with a tweet, make the statement? And they're saying that Mnuchin isn't helping, said Myra Rodriguez Valadares, a former foreign exchange analyst for the Federal Reserve Bank of New York. For him to come out and explain what Trump is expressing is bizarre. It adds to the nervousness. But many people see the Fed, and this is my own commentary here, that the Fed is acting really in a sense politically. And even though Powell is an appointee of Trump, is the Federal Reserve really independent? And are they really doing things with our best interest at heart? And many of us in this community don't think that's the case. And this is why we hold precious metals, gold and silver. And so we're going to hold on to those so that we can be independent of all the system. No matter what happens, it will protect us in one way or another. But nonetheless, I think it's important to be up to date in these matters, understand what's going on so that we can make moves to either hold on or buy more of these precious metals to further protect ourselves. A Treasury spokesman said Mnuchin initiated Sunday's calls with the bankers because he felt that having conversations with major market participants as well as holding the working group call was prudent given considerable market volatility. I don't know that I necessarily fault him for doing that, by the way. But in a sense, depending on what his motivations are, I think that he was going to be criticized either way. The group, which includes officials from the Federal Reserve, the Securities and Exchange Commission, and the Commodity Futures Trading Commission, was created after the 1987 U.S. stock market crash by an executive order signed by President Ronald Reagan. The group worked overtime during the global financial crisis of 2008. In October of that year, it issued a statement saying it was taking multiple actions to stabilize the financial system. Some saw the Treasury's response as adding to a sense of crisis. The Secretary of Treasury calling the nation's top bankers on a Sunday to confirm that they have cash to lend, not exactly confidence-inspiring, said Ian Bremer, president of the Eurasia Group. Can't get worse. Chris Rupte, chief financial economist at MUFG Union Bank, said Mnuchin's bid to calm the markets may yet succeed, if only due to the year-end holidays where trading volumes have ground to halt. Given the stock market loss has already suffered, we are keeping our fingers crossed that the news and the tweets out of Washington cannot possibly get any worse for now. According to the Treasury, the chief executive Mnuchin spoke with on Sunday, where, I mentioned the actual names of the folks from those 6 banks. Spokesman for Goldman Sachs confirmed that Solomon spoke to Mnuchin, but declined to provide further detail. Spokesperson for Citigroup, Morgan Stanley, Wells Fargo declined to comment as well. J.P. Morgan Chase, the nation's largest bank, who was contacted before Mnuchin's tweet, also declined to comment. And so they're all not talking about what's going on there. But nonetheless, it's going to be interesting to see how this all plays out. But so far, as of right now, the markets seem to be recovering a bit from the big drop earlier in the morning. Could some of this be algorithms or whatever, placeholders, computer programs? It's a light trading day. It's the day before Christmas, and I don't think anybody wants the day to end before a federal holiday down in the dumps, because that means Christmas is going to be a day of worry and coming in, markets moving back in on Wednesday. What's going to happen then towards the end of the year? So, but nonetheless, it'll be interesting to see how this all plays out. But no matter what your views about any of these situations, about what's going on, what the federal government is doing, what the big banks are doing, and what the Federal Reserve are doing, we all know, and we hold gold here on this Christmas Eve to protect us, gold and silver. And so we will continue to do so. The metals will reflect the markets in due course, in due time, even though they may not show much of a movement during these crisis periods. That's happened before in prior crises, such as the one in 2007, 2008. It took a while for gold and silver really to react. And times like those that we take advantage of buying when we can afford to do so. So post your thoughts below. On this Christmas Eve, the Plunge Protection Team like to extend a multitude of gratitude y'all for watching and encourage you to please rate, comment, and subscribe.